On this channel, you'll often find us talking about the flaws of the Walt Disney Company. It's not something that we do by choice, and when we get the opportunity, we love to score things highly, just as we did for the Loki finale. But by and large, we have to say that Disney is divorced from their market at large. They don't understand their consumers, and their consumers don't understand why Disney can't make good content anymore. However, there seems to be a disconnect when it comes to the Disney stock after the most recent earnings call. While we are not a financial advice channel, we have some answers for you folks out there who are wondering about this most recent uptick in the Disney stock, what's going on, what's causing it, and just as always, folks, we'll explain it right now. Hello folks, welcome back to another fascinating video here on the WDW Pro channel. A joy as always that you have elected to join us. Thank you so much for sharing your time, having us on your devices, putting us into those speakers. We love spending time with you, and we love explaining entertainment, keeping you ahead of the culture curve. Folks, we're here to tell you that Disney has seen a slight uptick in their stock as of recent. In the last few days, they have had a bounce out of that earnings call, and it's not something that I think garners huge amounts of headlines. They didn't see some sort of like 20% upswing, but it was significant, and we want to explain what is going on here. It's a little complicated because the market is often reacting in ways that people don't anticipate. Here on this channel, we're not taken aback by it at all, and we also find it interesting to explain how this can be happening at the same time that consumers seem to be cratering when it comes to Disney. It's all very, very interesting conversation that we think you'll enjoy. We've got some experts on the panel, and we're ready to tell it to you right now. Out of Variety, this by Jennifer Mass. Disney Plus tops 150 million subscribers. Streaming loss narrows to $387 million. This is really what drove the stock, we believe, over the last 24 hours. Although This is not a channel for you to receive financial advice, please don't make any financial decisions due to anything that we say. Seek out your own personal financial advisor whom you trust, is well respected, and has all the credentials necessary. But in this article, of course, it talks about the Disney Plus topping 150. We'll talk about that in just a moment. But this is the big thing I think that investors were looking at. But in terms of what happened over the last 24 hours or so, Disney stock gains 7% as cost-cutting target reaches 7.5 billion and subscribers surge. And so, folks, you've got to understand, and there's the chart right there. What you got to understand is that the average investor, and even the far above average investor, is not watching shows such as this. They don't know really what's on the horizon. And what happens is that over a long period of time, the market seems to correct itself in whatever direction it should go, usually, unless we get into a really bad situation, but the market corrects itself over a long period of time. We're within 24 hours. Disney put out a very clever earnings call where they said some things that sound very good, and we really broke that down in this morning's AM video, where we talked about three things and gave high specificity to the way that Disney sort of, I don't want to say they mislead, but that people seem to have been misled, maybe of our own ignorance. Let's put it that way. And those three things, of course, were Disney's claiming that they were going to do this large capital expenditure investment into Disney parks. And then in the investment, there was about two sentences that said, oh, by the way, that's over the next 10 years and it's back-ended. So in other words, folks, it's all that investment is basically being pushed to the back. And that means that due to inflation, that is a massive decrease in CapEx expenditures.
It's only 600 million per park per year, and if it's averaged out, but most of that is going to be spent closer to 2033.
I heard the turbocharged language though. That can't be correct. It's must be something else.
Then there was also the situation of them lauding and praising 6 films this year, and they failed to mention that 4 of those 6 either have or are very likely to be box office failures. The average investor out there doesn't know that. They simply don't. And then with these Disney Plus subscribers, and this is where we're going to go, and then I've got one other thought I want to drop on this, but with the Disney Plus subscribers, what they didn't mention is that for the past month, 2 months, they've been running a $199 deal where they're basically giving away Disney Plus for free. They also didn't talk a lot about... Yeah, go ahead.
Also in the international regions as well. That's in the UK.
They also didn't talk very much about the fact that they're about to have a massive subscriber purge Although they did say that in Q1, streaming would face some headwinds. But they didn't say, we're looking at millions and millions and millions of accounts dropping due to issues with Hotstar. And all of this, I think, you can't expect investors to know everything at a high resolution about every single company. But Disney is exceedingly good or bad, depending on how you look at it, in terms of packaging the magic to investors. The problem here is that just like in a relationship at home, folks, you can only mislead your spouse for so long before, you're going to have a real issue. And I think the dragon is growing in terms of the chaos that the company faces down the road as a result. But I do have one other thought, and then I want to go to Vash and Jonas to get their thoughts on this. The other thought I would say here is that there are a lot of people out there who are thinking, well, we've heard from South Park and the YouTubers and, all of these analysts bounding into comics, thatparkplace.com, that Disney's on the down. And here they had this great earnings call. Those people are wrong. And what I would say to this is I think that there is significant anticipation from the investors that Disney has done so poorly for so long that they got a glimmer of hope, and they're all trying to hop in on this and find the bounce. And I think that may also be playing into this, although, again, no financial advice being given. But I want to go to Jonas, because, Jonas, you had some thoughts on the subscriptions and what's playing into this in this stock price right now. What do you think?
Well, yeah, the first thing is that they dipped in subscriptions, and that would the previous quarter they had a 300,000 subscriber loss in.
And that's a big number that investors went, oh no.
Right, which was that the stock price did not react well to that. I'll also point out that when Disney was at the height of its stock price a couple of years back, that was when everyone was speculating that they were going to be the next Netflix at some point. So as great as those theme parks are, as great as those movies were at the time, it's pretty apparent that stock speculation was all around streaming, because everyone lost their minds about streaming. So yesterday they announced 7 million new subscribers over the last 3 months, and the stock price went up. They also were very tricky and said, you know what, by the way, we've got this new streaming service that we're going to bring out any day now. It's a $35 a month streaming service. So they've basically said they're going to go do Disney Plus again. They're going to take investors on this ride one more time, this time for ESPN, and hopefully with several strategic partners. So they're going back to that classic well of, yes, we're going to do more streaming investments. It drives me insane because I don't think it's fiscally responsible. That being said, if they can keep the sports rights, good for them. They've got something long term. But my goodness, I'm getting tired of the streaming stock price roller coaster.
And I talked to an expert today about this. And the expert said to me, what they're looking at here, the investors, is that historically Disney has performed better than they have in the past years. And so once they got this optimism, then all of a sudden, the investors started playing the game of, all right, well, what's the historical achievement of this company? Oh, it's underneath. All right, buy. But we don't really, on this channel, I try not to have knee-jerk reactions to stock fluctuations over 24 hours. Warren Buffett doesn't play that way, and I don't think we should play that way either. We're looking at a company, and this is what's so funny to me. You can get a lot of clicks on Twitter by covering it this way, but the reality is this is a company that is still under 50% of its value that it had 2 years ago. The fact that it got a $5 bump, am I going to sit here and say Disney's on the right track when I'm also watching the Marvels bomb at the box office, and I'm preparing to watch Loki perhaps have less than half of its original ratings for the finale, season 1 versus season 2. I have to weigh all of that in. Vash.
Yeah, I mean, I completely agree with you. I personally take that the stock might be a little bit undervalued, and I think that goes.
And that's what investors are thinking. Yeah,
right. That's kind of correcting in that way, but it's clear. I mean, they're just looking at streaming. They see that as the growth revenue model for this company going forward, even though it's at the expense of their previous models, such as linear and even their film and television and all those assets they used to have and all the things that they used to gain, especially when it came to we release a film and then we sell that film multiple times to different distributors, or let's say we make them up on Blu-ray sales and all that kind of stuff. All of that has been completely upended.
And park rides and everything else. That's been their formula since day one.
Exactly, right?
But there's two things here. we had the four of the top movies. Yeah, but they didn't make money.
Right.
We have X zillion subscribers. Yeah, but they're not paying what you want them to. You gave them a discount, or you're counting them twice, or all kinds of. Look, to me, there's only
trickery.
one important date that we have no concept of when it's going to happen, but when it does, it's going to reveal all of this. Well, I'm not an investment guy, and I have no fear. Deception. Jonas, when do you suppose Mr. Peltz is going to put his white paper out?
Very soon. There's
because they just added a few pages to it in this call with all of this stuff.
Right.
Yeah.
This whole idea
Who's to say that $5 bump isn't Nelson Peltz buying more stock?
It's a very good point. He's got a lot of control of a lot of money. I will say that there's that CNBC has reported that Alex Sherman, the same guy who did the 12,000 word expose on Iger and Chapek and all that misbehavior, he said that Peltz was waiting for this call to decide whether or not he was going to do a proxy fight. That white paper, there is no way that Bob Iger does not know what Nelson Peltz wants. That is an inflammatory statement where he was prodding him on CNBC yesterday.
Dismissive and adversarial.
Oh,
and
yes.
and he was smiling and smirking when they were talking about Hugh Johnston's history against Nelson Peltz. So I see, and also to mention the 45th president of the United States was just out there at a rally pointing out that Ike Perlmutter was in the audience and he doesn't like how woke Disney and Marvel have gotten. So there's just antagonism on top of antagonism.
And what that means, Jonas, is egos are going to be involved here.
And just to be clear, that's $1.5 billion worth of shares that are probably just Isaac Perlmutter's shares on top of the $1 billion that Peltz controls. So there's a lot of mud being slung right now.
Putting all the rest of that aside, the personalities and the whatever, everybody who bought the stuff on that call, who just bought some more stock, all those investment guys that called in and get their little questions in, they're not going to have any excuse for not knowing anymore once that white paper comes out, is my point. Right now, well, we were fooled along with the rest of you. But surprise, here it is in black and white. Schmuck, why did you buy that lie?
This is a family.
All I'm trying to say is,
why did
we talk about how they all boost Disney and how all the media and everybody else, but if you make them look like idiots for doing it because you throw the facts in their face, they have to be shocked that there's gambling going on in this establishment and walk away. They just have to, or else their own reputations go down with Bob's.
I think it's profoundly interesting where the stock actually lies and where these investments eventually go. You know, we look at the streaming side of the business and we go, okay, there's some manipulation there. But then we look at the park side of the business and we go, okay, well, that's contributing to most of your profit year over year, and yet we're not getting any new developments or new attractions or themed lands or anything in the theme park space domestically for the next 3 years. And we know our per caps are probably down at Walt Disney World, even though it wasn't necessarily referenced in the actual earnings call itself. It was stated that the income per guest was lower at the Walt Disney World side than it had been before. And they say hotels, and I guess there is some argument for that. But if
I don't want to go to the parks anymore, suddenly all those great timeshares become no different competitively than the ones that are at a beach or at a mountain or somewhere else.
Exactly.
And on their timeshares is the park experience. And if the families are saying, well, I'm not so sure about that anymore, suddenly all of that goes away. Exactly.
Right, and at a time when competition is ramping up, right? We have new investments in, University of Hollywood. We have an entirely new theme park in Florida. We have a new regional park in Texas. We have a new haunted HHN experience in Vegas. And so it's like,
and those guys on I-40 up there, they could have timeshare trailers. I don't know. Anyway.
I'll just
wait until they actually start marketing the Harry Potter land there, right next to Super Nintendo World in Orlando. Bro, go ahead.
Yeah.
I'll just say that I don't have any inside information about this in terms of the content. I don't know when it's going to happen, but there are very strong rumors that information is going to drop about Disney that will be very interesting to very many people. near term. And I can't say any more than that, but and don't make any decisions based on that, please. But just know that the rumors are going around that there's something out there that is of significance that we're all going to be talking about in the next little bit. And folks, that's a wrap. We hope we did well. You let us know down in the comments below. Tell us, do you think we got this right? Did we get it wrong? Have we misled you about Disney and perhaps they're about to experience a golden age once more? Or do you think that we're right on the money on this and that investors may be looking at how poorly Disney has done and betting that there's going to be at least some sort of growth out of the company? Surely they can't keep doing this poorly. Boy, what a sad sack of a situation that would be if Disney is getting a bounce out of people who believe they just can't go any lower. But that may be true. All right, folks, if you like content like this, consider clicking the like button. Share, subscribe. When you click it, you stick it to the algorithms. It's the notification bell. And don't forget that on November 20th at 4 p.m. Eastern Time, we will have a special live stream for the WW Pro show where we will be making a major announcement regarding thatparkplace.com, including a press release. You do not want to miss it as we prepare to make a website become the center of pop culture when it comes to news and information. All right, folks, wherever you are and whatever you're doing, keep learning, keep growing, and keep having fun.